All right, we're live. We are live. We are going to do our weekly market review. But before we do that, don't panic. Don't run off. Don't go, what's going on here? We have a load of data. Yes, for some of you traders out there, this is what's called data. This is what you should be tracking on your trades and everything that you anything and everything you trade, you should be tracking. So I wanted to just run through one of our strategies because I want to talk to you about a concept before we get into the review of what's called return on time invested. So it's not always about the percentage return that you get as a trader, but the percentage return relative to number one, the time you put in, but also relative to your risk to reward, your win loss ratio, and all the factors that play out to essentially make up that strategy. So it's that time of year because we've reached the end of the year. We have certain points in the year where we do reviews. So we tend to review this strategy April to April because you'll notice if I run to the top of this particular strategy, you can see the first trade was actually the 3rd of April 2017. And this is a strategy that a lot of our traders trade. It's called our beat the bank strategy, our first day of the month trade. And a lot of our room traders trade it, whether they're day traders or swing. But we actually have specific traders that only trade this, partly because they're only looking for a smaller yearly return, but a minimum amount of time that they put into that. So we review 3 times in the year. We review April to April, so we can get a year-on-year figure for this strategy. We tend to review September for the swing strategies, but we also take a break at the end of the year to have a look where we are. Our day traders will be reviewing on a more regular basis. So we're at that end of year point, so it's important that you take a look at the overall results. Now, this particular strategy is one that you only trade once a month. It's same trade, month in, month out. But since we brought that to the global community, it's done 78.16% return. That is with only 2.5% of risk on any one trade, a maximum of 2 trades a month. And you're essentially taking probably about 20 minutes to do it. So it's a very, very time efficient strategy. Yes, we have traders and strategies that perform way better than nearly 80% over a 3.5 year period. But if you think about the amount of time, you're putting in less than half an hour a month. So it's a pretty good return for your time invested. If you're a UK trader and you can run this through a spread betting account, then obviously there's tax benefits on top of that as well. But it's important not just to talk and holler about the result, is to actually look at what prices you've had to pay for that, because as you'll notice through the actual trade column here, you can see there are periods where the strategy loses, and with that low trade frequency during that period there, you're going to be faced with quite a few losers. So overall, it has hit a drawdown period, it hit a drawdown, max drawdown since the start of less than 5%. If you were trading through this period here, you'd be down minus 8%. So it's important to understand, and this is where so many traders go wrong, is they will trade strategies that they don't literally give enough time to play out. So again, it can simply be when you start. This year's been very good. We've had a good year. But if you notice, I'll go to the dashboard, you can see with this strategy that its win-loss percentage is 63%. So it's winning 63% of the time. Its longest losing run is 5 trades in a row. So that's essentially about 2.5 months. And the longest winning run, you can see there, is 3 trades in a row. So you can see it dripped into drawdown, it's been steadily going up. But it's important to understand that year on year, you're not necessarily going to get the same results. So if I was just to pull up 2018, for example, and pull that into the mix, and we go and look at the results, you can see here that the results show that your win-loss ratio is a lot less than that 60 odd percent. So again, it's about timing. It's really important to note that. So you've always got to look at 3 factors: risk to reward, win loss, but a factor that gets overlooked a lot is trade frequency, and knowing your average trade frequency over a certain period of time. But overall, yeah, we're really pleased with this strategy. It's had a good year. We've actually got a trailing stop version of this that we've been testing as well, that we're looking to bring in. So that will essentially not necessarily improve on the win-loss. It'll actually drop the win-loss lower, but it will massively improve on the risk to reward. So again, you don't necessarily have to do that as a trader, because that risk to reward and that additional number of losers, yes, you increase your risk to reward, but you might not want to trade with more losers. So you have to bear this in mind. So whenever there's an increase in profitability, there's usually a price you have to pay, and the smart traders work out what that price is. So again, I'm going to be posting some of this up in the private Facebook group, some of the results you can see here. Here's the backtested results. So we did 20 years worth of backtesting before we actually brought this to our traders 3.5 years ago. You'll notice that the average return is 18% over that 20-year period. We're actually, it's 18.11. We're actually slightly above that. So if you look at our average just here, we're slightly above. Well, it's actually 13% over those 3 years, but if you include the year to date, we're slightly above that. So we're happy with the average. It's slightly below over the April to April, but remember, these years were tracking, they weren't tracking April to April, they were start of the year to the end of the year. So this is the level of detail we go to with any of the strategies that we trade. We don't necessarily test 20 years worth of strategies, because if we've got a strategy that you're trading 5 trades a day, you're not going to be able to necessarily get 20 years worth of data, and 20 years data isn't relevant. But a strategy that you only trade once a month, maximum of 2 trades, you need that equivalent data to be confident in the trade setup. So you can see there, first year 14.77, year 2 April to April was a minus, year 3 27.1, and year to date since the start of this year 33.03. Pretty good returns, but remember, we're not winning all the time. We're only winning 63% of the time. But as you can see from the data, when we win on every trade, we win twice as much. We actually had a couple of trades where we won a little bit more as well. So on every trade, we win twice as much, sometimes a little bit more. All right. So hopefully that was useful. As you go through our Kickstart program, those of you that are keen to do our 28-day Kickstart program, we're actually full for Jan, but we're opening up for March very soon. Part of what you cover in that is learning how to extrapolate the right data, use the data analysis to make data-oriented decisions with your trades. So yeah, this is essentially the minimum we will go to. And obviously, if you were looking at the backtesting results, which you'd have access to on the Beat the Banks program, which comes after the Kickstart, this particular strategy, you get access to all the data. So if there's any of those trainings, strategies, things that we do that interest you, message us, DM us, get in touch with us at Support Trader Support Club, and we can help you with that. So a little bit of a review on that strategy. Happy with how it's going. Nothing we need to change. So we will review that again in April when we can get year 4, year to date on that, April to April on that one. So we'll keep updating that. So let's go and have a little look at main indices. Let's see what's going on. Let's see what's been happening. So we'll start with the S&P. You can see very, very small daily candles here relative to what we've seen. Just very steady, trickling on up, new highs all the time. So again, all-time highs on the futures. We're going higher and higher, but at the moment, it's not really making any kind of move here. If we compare that to the Dow and go and have a little look at the Dow, you'll see here, similar, not quite broken away in the same way, more of an ascending triangle pattern that's just drifted slightly higher. But again, not really giving us any trades based on that price action. If we compare the NASDAQ, now we talked a lot about the NASDAQ usually leading the main indices, the other main indices slightly ahead, but again, just drifting above and creating, all-time highs here. It's not really doing anything clear here. Oil. Now, that particular strategy that I was showing you, the Beat the Bank strategy, that is on oil. We actually had 2 losers this month. So it can and it will happen. But at the moment, we are sitting above this $43 resistance. We've broken above that. We've pulled back, and then we're hovering in this gap. So at the moment, for me, this white line doesn't represent a strong resistance, but it is a prior support from here, the lows that you can see here that were broken at the start of the year. That is what I would call an interim or weaker support or weaker resistance. So for me, I wouldn't trade a reversal off that level. For me to trade a reversal on oil outside of that particular strategy, if I was looking for a swing trade, my reversal level now would be up here in line with these previous highs. But I could use this as a target if I was trading a breakout or with the trend trade in that gap. But I wouldn't trade the reversal here. So for me, the price would need to be more extended now to trade the reversal. But I would still consider that little area as a potential target if I was in a with the trend position. So if I was considering, which I'm not, but if I was a breakout trader was considering a breakout here, that interim support and resistance I would use as a potential stop move or profit take, whereas my reversal would be further up at this point here. So that's oil. Let's go and have a look what gold and silver have been up to. See what they've been doing. Gold, you can see here, crisscrossing. Crisscrossing its moving averages for a while, moved down, moved back up. I think the weekly actually shows this a little better. You can see that we've almost had a bounce off the weekly 50 here. Some of our guys would have used that as a potential reversal opportunity down at that point there. But for me, at the moment, I'm looking to see if we can break back above that 21, push on a little bit. I would be more bullish short term on gold if we could take those recent highs out just there around November time. If we could take those out, then I'd be looking for a retest there. Silver, again, very choppy. Hasn't made it down to its weekly 50, but again, sideways. Similar thing, the November area here, I would be looking for those highs to be broken and would feel more confident if they got broken of getting back up to this level. We haven't broken those lows, so we've kept those in place just there. A quick look at, let's go to Euro US dollar. Obviously, with Brexit talks going on, a little bit of uncertainty there. Euro's actually had a little push up in the last couple of weeks, but very indecisive so far this week. I think you can see a little push up last week, broke out of this little area of short-term resistance, but this week just sitting very, very indecisive, as you can see. I'll go back to the weekly. So although that's not the end of the week, you can see we're just hovering there. So a little push up. For me, with Euro, what we're looking for in our trading room in terms of reversals is a move up to this level here. So the reversal level for us will be back up at the 218 highs. If there was to be a move back down, there could be a pullback momentum trade because there is enough clean air between this recent high and that area there. I would obviously, if I was in a trade, I'd consider staging out my exit in line with those previous highs that are a little bit higher, but for the reverse, I'd want to be there. So essentially, I've got a decent chunk of clean air there. So if we go down now and have a little look at the daily, we can build a bit of a picture there. So with that new high, you can see it just there, with that new high, then we would look for Euro to come down and make its way back down towards the blue moving average, the 21, with those prior highs just there. And as you can see, if I just pull up our momentum trade list, you can see in there Euro is actually one of those that we've got on the list. Now that isn't a list of all the trades that we are in, but that is a list of swing trades that goes out to all of our room members for that particular strategy, and that will give them the list of possible trades. Now obviously they move and they shift. Sometimes one is closer to setting up than the other. Sometimes they're potential discussion, because some people will see them slightly differently than others. But what you'll notice is we've got a couple of markets here, New Zealand dollar CAD being one of them, where we've got the new high. We've pulled back, but we're just looking for price to prove itself down at this 21 moving average. We've bounced off those prior highs back here, but we need price to prove itself. So you can see with New Zealand dollar CAD, Euro, similar, Euro's just got further to go. It need to come down first, and then you can see that's that bit of clean air that we could trade up into if we wanted to trade further past that previous high. So we've got a few little markets like that. We've got a couple that are opposing, so they're going in the opposite direction, one of which being US dollar, Canadian dollar. You'll see that we were looking for a reversal on that down at those lows. Price on this occasion, bearing in mind we've had a few hits, price on this occasion broke through that level, had a weekly close below it, so it looks as though we may want more downside from there. Obviously, if we come to pull back up, we've got all of this zone. So this looks pretty busy. So it's tricky to find one area in here. If we take a look at the most recent line, because that's the lows from here and the lows from 2020, right at the start of the year. If I now go down to the daily, you'll see that price has made that move below. So we could look for a pullback and then for price to prove itself and suggest it wants to go back down again. So there's room for more downside there. You've got to be a little bit careful about doing that at a previous support, because it might be that price wants to bounce up, but it has so far shown its hand to the downside a little bit. So a move back up and then a move down could be a setup. So US dollar CAD, Euro, New Zealand dollar CAD, a lot of those we're looking at as momentums. Most of our possible reversal trades, as you saw with Euro and Euro Yen and New Zealand dollar, Canadian dollar, and New Zealand dollar Swiss franc, they're a little bit away from the resistance level that we need. All right, so I'm going to call it a day there. Hope that was useful. And as I've said, if you're interested in finding more about our Beat the Banks program, that one strategy that you can trade once a month that's averaged nearly 80%, 78.3% in the last about 3.5, 3.75 years. It's a pretty good return, averaging about 18% per year. Or you want to know more about our Kickstart, as I've said, we're full for January, but we have opened up the Kickstart for March. So if you want to work with myself and Kerry directly, jump on the website, go onto the private members group, message us at support, DM us via Facebook, just get in touch, or use one of the links on your membership on your free membership to get booked on. I look forward to speaking to you soon. Have a good one. Take care.